Good evening, everyone, and hello to all the invitees and attendees to this wonderful webinar we're holding. First and foremost, I'd like to introduce myself. I'm Turki Latebi, an analyst in the listing division for the Saudi Stock Exchange. And one of the objectives, as many of you know, since from the invites as well as the emails, is the focus of this webinar happens to be towards the importance of investor relations, as well as research coverage that is focused towards Nemo-listed companies. Of course, alongside me we have our two panelists, some well-regarded individuals in their own field. From the IR perspective, we have the chairman as well as founding member of the Saudi chapter of Mira, Mr. Rayyan Al-Garawi. And from Al Jazeera Capital, who will be taking charge in regards to the research coverage aspect of this webinar, is Talha Nazar, who has over 8 years experience in the GCC market. And I wanted to extend my hellos to my fellow panelists and colleagues. And as always, it's always a joy to hear you and speak to you. If we can go ahead and begin the questionnaire as well as the webinars, we can kind of start with some of the questions, and it'll be focused towards the Mr. Rayyan Al-Garawi. So we would like to start with some of the first question we wanted to kind of get his perspective on, which is, what is investor relations, and what are the best practices considered in terms of investor relations from his experience?
Assalamu alaikum wa rahmatullah. Shukran akhoy Turki. Thank you very much for inviting me to this webinar, and thank you for having us. Talha and I go way back there a long time. I've been in investor relations for going on 10 years now. And I've seen a few crises, and this is just the most recent one. So I think that Tadawul, actually, Turkey has done an amazing role in terms of promoting IR, and we thank you for this as the Saudi chapter, as well as the main Mira board. We have been trying to improve IR in the regions, and with your support and with your help, we have been able to do that, and we hope that we're helping you achieve your goals as well in promoting IR and listed companies. We have more recently seen Tadawul actually issue a report, the best practice, which I think is an excellent document. It's in Arabic and English, and I encourage everyone to read that document. It is well founded. We as Mira also looked at it and reviewed it before it was published, so it's a really good document. We're really proud of it, and we think this is a document that everybody who has a listed company should really look at, see where the aspects are. Now, the benefit of IR as a whole is that you get a fair value for your share. It's not going to help increase the share price or decrease the share price, but when you have two companies that are the same for all intents and purposes, the one that is transparent and will communicate with you will, of course, get a better valuation from investors and analysts than the other one that is handling everything like a black box. So we have seen over the years, especially when I work now for a listed company, Arabiya, and we've issued debt in the financial markets, and you see the benefit when you go back to the market and you issue instruments. You see the valuations, you see the reports from analysts, the sell-side analysts like Talha, who has been heading the Jazeera efforts for some time now. You see all of these fruits coming towards you. So it's really important to have a very strong IR. I'm not talking about somebody who's handling IR as a secondary job. I'm saying you have to have a full-fledged team, but depending on the size of your company, of course, that varies. But you really need to focus on investor relations, and the benefits are just multifold. And investors, I keep hearing from a daily basis from investors their thanks for the transparency, for the communication, for the efforts that we're putting into this, for the availability of myself and the CEO for calls, for interviews, and of course the presentations and everything we do. So I think I've taken a long time here explaining something that is simple, but that's my 2 cents on what I think is important for listed companies, whether in Nemo or in the primary market.
No, it's, if anything, what you've provided for us is of great value, and I don't think anyone here in attendance would be remiss to not hear this type of answer to that particular question. So just to kind of follow it up, how do you find the IR function in terms of translating to company performance? As you know, some companies might be a little hesitant to implement some functionality, not from a worry perspective, but perhaps lack of knowledge in regards to why does this benefit me as an organization?
Well, yeah, absolutely. I mean, it's more than that even. I remember last year, was it the year before, we were at the CMA, I think you were there as well, with your colleagues in a conference at the CMA. We were speaking on behalf of MIRA, and the CMA was speaking about the encouragement of listed companies to have an IR function, and even going so far as hinting that this is going to be becoming more and more important with the QFIs or the international investors coming in. Look, at that, the importance of IR is for especially international investors, for them to understand and comprehend the company, the strategy, what the company is doing, what is happening on the company level, what's happening with the actual numbers. So in that conference that I brought up, we had a lot of people that actually said, well, we are worried that we are overstepping our boundaries with the CMA in terms of what we can talk about. And there is a red line, of course, and the red line is anything that will affect the share price. But if an analyst calls or an investor calls and asks for details about something in the published financials, then you can talk about that. As long, I mean, it's already published, so there's nothing to hide there. It's when you're talking about future projects or you're talking about numbers that haven't been published yet, there you have to be cautious and not to disclose anything, because that would be considered selective disclosure. So yes, of course, IR shouldn't be handled by somebody who has no understanding of the regulations. It shouldn't be handled by somebody who doesn't understand finance. There are certain criteria, and I'm happy to discuss that at length with anybody in the audience that is interested. But at the same time, it's not rocket science. Not that rocket science is rocket science, but it isn't that complicated. And we can, of course, deal with these questions and answer questions to investors. It's very important to answer investor questions.
Absolutely, and I think that's an excellent point that you've made. And considering the current circumstances, as you mentioned, this is just one of many that many people have faced over the years. I think we can say that some organizations or some listed companies have been hit a little bit harder than most in regards to the idea of social distancing and limiting the exposure of citizens in regards to the importance of their public health. So I wanted to kind of ask you, from your current circumstances, how has the current health pandemic highlighted the importance of an IR function?
You know, this is something that has never been seen around the world. So this is a first. And I've seen crises in the past, but this is a first of its magnitude and size. I've held more calls in the last 2 months than I've held in the last 6 months. And mostly it is with investors that understand that we don't have all the answers. They understand that we are in a situation where we're trying to figure out what best handle the situation. Now, I head investor relations I'm the group head of investor relations for Markaz Arabiya and so Arabian centers. And our centers have been closed, and now we're only partially opened. And we just got the extension now till the 22nd for the opening, and then we're closing for Eid. So this is all very important to communicate, discuss, exchange ideas, and exchange information with investors. And they want to hear from the company, what is it that you're doing? on top of things, and that's really the key. They don't need to have all the details, but they need to look into your eyes, they see your face, and say, this gentleman is actually, or this lady is actually telling me that they're working on it. They are trying their best to make this a success. This company is managed by people that I can believe in. And as it is with everything, you do not invest into things that look the same. You want to see the person, you want to see, you want to touch, you want to feel. We are people at the end, and we need more than just numbers to make our decisions.
Thank you so much. Those are all very poignant points that you've made, as well as highlight the importance in this particular situation. I'd like to kind of switch my attention to our fellow colleague Talha in regards to the research coverage. One of the most interesting things that is discussed around the world is the importance of coverage of specifically SMEs, as they are known as the kind of base of most economies. And I wanted to kind of get his perspective in what is the importance of independent equity research, and again, how does it translate in terms of market performance as well as corporate performance?
Thank you, Fawaz. Thank you for the wonderful question and an excellent review from Rayan, especially for the IR. And I think people like Rayan has been an excellent support throughout the companies that he has been working with us. So now coming to your question regarding research coverage for SMEs, let me tell you something. Studies after studies have shown that from 1980, I think in 1978 the study started, and I think the last study was done somewhere around 2009. All the studies have pointed to a couple of things. If I will point it out, asymmetry of information that usually happens within inefficient markets, especially when coverage of a certain stock take place, be it an SME or be it a large cap or be it a small cap, any company. What happens that the dissemination of information with the kind of equity research that any kind of equity research, let's just say, it makes that information public to the people. It makes the decision making simpler for the people, and in turn, what that does is higher liquidity. Your cost of equity. Studies have shown even that the cost of equity that the companies that have been under coverage for some period of time have witnessed their cost of equity going down. So it's not just that any company would have a lower cost of equity. A good company, a solid company, which has good backing by the analysts, and when I say good backing, a larger number of analysts are covering that particular stock, you will see that higher liquidity price. There will be basically there will be less volatility in the stock price. Secondly, the fair value of the stock, as Rayan earlier mentioned, that the fair value of the stock would be found out. And the moment we see that the prices have moved away from the fair value, that's when the opportunities arise. Although in Saudi Arabia, although still a short sell, although it's there, but there are opportunities on the both ends of the spectrum. You can have a buy call, you can have a sell call. So a good sell call at times can also be supportive for the company and even for the investors, because we as research analysts, as a whole, our community as a whole, if I talk about the community as a whole, we have a responsibility towards the investor. We have to make sure that the investor has the right information. He is making an informed decision. We have this theory of efficient markets, semi-efficient markets, inefficient markets. No market is efficient. Even the best of the markets in the world are not efficient. There is always asymmetry of information. But as analysts, what we try to do is to reduce that asymmetry. Try to make sure that the information that is going out to the people is at least the information is disseminated in a way that everyone has the same level of information before they make their investment decisions.
That's a very interesting points that you've made in regards to some of the studies that have been conducted. Perhaps maybe this is a rather basic question from my end, but I hope that you can provide a little bit more clarity on it. as you know, in the business world, some companies find it a little bit difficult to share or divulge information about their company, especially if they happen to be of a sensitive nature. So from a research perspective, of course, the importance of having the full picture as from the organization is most important to provide a clear analysis of the standing of that particular organization. How do you find, from your experience from organizations, with the amount of information that's shared, how can that be translated to them in terms of value added, either to that particular company or to that particular capital market?
Excellent question. I'll just have one answer to it, and that is cash flows don't lie. And whatever the company information that the company might not want to share if it's of sensitive nature, but they would the numbers at least would appear somewhere in the cash flows. So a lot of these investors, see, this is where the dilemma comes in. A lot of these investors, they look at the years of performance. 2020, this will be the numbers. 2021, this will. So for us as analysts, for us the most important thing is the cash flow generation ability of the company. So if any information that is not divulged, that is not made public, that is a hurdle. But still, we would have ample information if and especially if the management is open enough to pass on information that does not have an impact on their materiality, that does not have an impact on their competitive advantage. I think there is no harm. In fact, some of the managements of these companies, they need to come out. They need to share that information that we are doing X, Y, Z things, even if it shows to the world what their competitive advantage. It might give them a competitive edge. At a certain point in time, they have to come out and announce it. They have to come out and make it clear to the people what is the advantage, why exactly they are doing it. Because at the end of the day, the analysts are going to pick it up. And if it's positive news, if it's positive information, that we are going to jump on the news, we are going to issue the reports on the company. So you will see the right, left, and center reports will start flowing in for that particular stock if it's under coverage by the analyst of that company, of that sector, pardon. So,
if I may add to that, Turkey and Talha, I mean,
please do.
It is a fact that analysts are going to write about your company, whether you like it or not. So you can not influence their call, their decision, and it's not something that you can stop. So be proactive, be part of this. If there is lots of demand for your share in the market, it is important that you speak to the analyst, explain the story. You don't want an analyst, and I've had this sadly in the past, an analyst who doesn't speak to us and issue reports on us, and then they have numbers that are all wrong. CapEx that is in the billions when your CapEx for the year is $500 million, but because they don't understand, they didn't speak to you, they don't understand what your strategy is, they come up with their own conclusions.
Absolutely, I agree with what Rayan is saying. That's exactly what we want, because sometimes this has been my experience. We write about a company, we try to reach out to the company does not reply. We make a report, and the company, once we issue the report, they would send us an email. We do not agree with your assessment. Well, I agree. You shouldn't be agreeing with my assessment, because that was done in the dark. I looked at the numbers, and the numbers were speaking to me, and whatever they were speaking to me, I gave the valuation based on that. You did not diverge into your future prospect. You did not tell me what are the plans that you have. So you cannot expect me to come out and just move that magic wand and I will have the numbers. It's not possible. So people like Rayan, that's the beauty, because we have people in IR who are open to share information, who are open to give us the good and the bad, who are open to accept what is the challenges that are coming in, what are the opportunities that are coming. So I see, analysts are not anyone's enemies or not anyone's friends. For us, our responsibility is our investor. As long as we can provide an unbiased view to the investor with the help of the IR of a particular company, we are all up for it.
I think it's also important to mention, Talha, that every company goes through cycles, and when you see that the management is doing well, even in a down cycle, you will have investors sticking to the company because of the transparency, and maybe even increase their shareholding in the company due to this.
Absolutely. Sometimes our criteria for covering a company, at times it becomes that the management is good, the management is open, they come out and speak to you. So cyclicity is a part of every business, and the downturn, recessions, bear market, bull market. This is part of the game. We will have the black swan events that is happening as of now. But where we come in, where we as analysts are helpful, is to help you out in this particular time. That these things are not going to stay forever. No bad time stays forever. Things they have a cycle, they move with the cycle. So maybe right now there's no valuation in the stock, there is no upside in the stock, but we don't look at this year because this year is already gone. We look at 2021. This is where your valuation is stuck. This is where you should take a long-term view and invest. And this is where we as analysts can identify that what is good for the investors and what is not good for the investors. What has a long-term strong view and what has a short-term strong view. So it's basically a mix of things that can help the investors as a whole. And as Rayan has said about the cyclicity, I completely agree with that.
I think the beauty of this discussion was being able to see the close-knitted relationship between both the IR of a particular organization as well as the research coverage aspect of a particular company. So I'd like to ask this question, which is targeted to both of our panelists, and I'd like to kind of hear the answers from both sides. What would you see? How do you both see the relationship between the IROs in a particular organization as well as the research houses which cover a particular company? Is there a particular type of dialogue that is carried out on a regular basis? Is there a particular approach that is done? What is that type of relationship? And I'd like to kind of start off with Mr. Talha from the research cover side and then follow up with Mr. Rayan.
See, for me, the easiest relation with an IR guy is that I have his number on my mobile and my WhatsApp, and I can message him that we need to chat and we need to talk. What is happening? Where are we going? And this is where the relationship. Because if I have to go through a lengthy process of calling the company and the guy come to me at XYZ time, I know people are busy. It's not that, but what it does help if I have a direct access to the head of IR of any company, and I just give him a call, ask him what is happening, because that gives me a sort of an edge in a way that the information is disseminated quickly, and I as an analyst can disseminate that information to the investors at the same pace that we have been doing. So that's how basically that's how much important for me is the relationship, especially with the IR community as a whole.
And Mr. Rayan, would you like to provide your opinion from an IR perspective?
Allah yasallimak, of course. So from an IR perspective, look, analysts are going to write reports, as we said, right? So they're going to write them one way or another. You want them to write them with facts and information that you are describing your strategy. You want to talk to them about possible, I wouldn't say mistakes, but mistakes also happen, but about mistakes that have happened. And I've seen mistakes happening on companies I worked for, from Jazeera not so much, but from companies like JP Morgan, I've seen mistakes. From Bank of America Merrill Lynch, they've made mistakes. And we called them up, we corrected the mistakes, and we spoke to them. And I think it's always best to have an approach where we're speaking to the people as people. We are all human, we all make mistakes. So from an IR perspective, the relationship with all my analysts is they all have my mobile number, they all have my WhatsApp. Fine, I don't always answer immediately when they call or when they send me a message or ask for a meeting request, but I do try to get to them as soon as possible. Like yesterday and today, we had the Morgan Stanley conference online, of course. So we had many investor calls and such. So one of the analysts was trying to get a hold of me. I gave an appointment for tomorrow, but don't delay them. The relationship has to be a relationship of trust. The relationship has to be a relationship of understanding. They have to understand that I am not going to lie to them. I'm not going to be the PR of the company. I am the IR of the company. I tell you the facts of the company, the good, the bad, and the ugly. I'm not going to draw out all my dirty laundry, but I will tell you what is actually happening in the company. And this honesty is what's key when you build up a relationship with analysts. And what is so important in this, and often they call me because they get questions. I mean, end of the day, the sell-side analysts issue reports to their investors. So basically to the investors of my company, so the owners of my company, the shareholders of my company. And in that sense, they speak to them directly. And they have questions about my company, and they could call me directly, but because they prefer to have a third independent view and listen to somebody who's done in-depth analysis, not about my company alone, but by my competition as well, and understand from that person, where do you see the difference between this and that? And again, I go back to the example I gave in the beginning. If you've got two companies, one is a black box, one provides information, which one will you invest in? And that's where the analyst comes in and tells investors, listen, we know all the companies in this field. This company is transparent. Yes, they're having troubles right now. Their numbers don't look as nice as this other company, but this company is transparent. The other one, we don't know. All these numbers are, you know, in accounting, many things can happen, but we are confident that this company, this management are doing what's needed. And this will also make the investment decisions.
It's a very interesting point, and I think it's a nice point to highlight that the importance that an IR, that transparency, it's not in their best position to only provide the good, it's to provide the whole picture as a whole. And to follow up to that type of kind of information, I wanted to kind of discuss with Mr. Talha in regards to perhaps facing certain organizations who have, when in discussions for research coverage, have withheld perhaps company information, and how did that translate the relationship, and how did that affect the type of dialogue between the two entities?
I can name a few companies. I won't, but
let's not name anybody. Let's just discuss in a very general.
But one of the companies I can mention that they plainly lied. Let's just be true. We gave a number. They called me up and said, "No, your number is wrong. You need to be." This was 5 years back, but I still can't forget it. You need to be a bit more conservative. They wanted to beat our estimates, and the number I was giving and the number that they gave, we couldn't do anything. The company came out, what they told us, we did it. Because if they're saying that we are going to put an XYZ number, and he's telling me that he's calling everyone, I have to do it. But then the numbers come out, and they are what we were earlier expecting. So it does affect our trust, and we then always take their point of view with a bit of skepticism, and that is bound to happen because. As Rayan said, that it's important, it's imperative that you share information. But sometimes, if things are not going right, and there are certain level of benefits attached to your to the value of the stock, I think these things are bound to happen. It's not just any part of the world. I'm talking about across the globe. You go anywhere, if you have your benefits attached to a couple of performances, you might see things that are out of the ordinary. But from the industry, if I talk about it, just once or twice we have had this experience with people who usually talk. They will give you information. For them, the easiest way to get out is it's there on the financials, or we cannot share it. Whatever the case may be, they do not usually explain. But it's a different relation with a company that comes out and comes out clean, and as compared to a company that does not come out clean.
That's a very excellent point, and I kind of wanted to carry on this to Mr. Rayan. As an IRO, it is your responsibility to kind of always cover the company as a whole. What piece of advice would you like to offer perhaps some of the members of the audience or anyone who's listening in regards to perhaps being pressured not to divulge certain information as a professional? And in the IR function, of course, it is their responsibility to be fully transparent. How does one approach that type of situation when they are being pressured from other ends, perhaps?
Well, look, I mean, there is confidential information and there is information which is available in the financials. And as I said before, there is a red line, obviously. So any information that is possible to affect a investor's decision to buy shares, that's as per the corporate governance guidelines of the CMA, that is considered privileged information and needs to be announced on the exchange first. So if I announce a piece of information on the exchange, then I can talk about it. So if I announce, for example, that Arabian Centers is going to build the biggest mall in the world, Dubai Mall, 10 times over in Mecca.
I hope they don't quote you on that.
I hope nobody quotes me on that one. I made it ridiculous enough that nobody in his right mind can take this seriously. So Dubai Mall is unique in the world. So let's be clear on that. So that being said, that information should not be presented to an investor without sharing it on the exchange first, or with an analyst, or with anybody. So from that point on, once we've announced this and we announce the size, the amount, etc., an investor calls and asks, "Well, look, are you planning to have more retail in there or more entertainment?" Then they can talk about these things. It's not something that is now in private, because you've announced details. You can put this in your presentation and share it on your website. And I encourage every company really to have an investor presentation. An investor presentation, and please go have a look at mine for lack of anything better that comes to mind. But I'm sure you'll find in your industry many presentations from international companies. There are various IR consultants that will help you develop this in the region, and Mira can help you with that. But more importantly, what I'm saying is, you have to have an equity story.
Absolutely, that's an excellent point to make, as well as it's important to realize. Yes, exactly. So that way to kind of give a clarity into the company standings, as well as the strategy moving forward. I think one of the most interesting points that I'd like to also raise during this panel is we kind of covered the idea of companies or perhaps people who might not divulge full information. I wanted to kind of ask Mr. Talha if there's ever been a situation where divulging too much has either worked positively or negatively toward the organization from a research perspective.
It has not happened so far. Someone has divulged too much information, because believe me, information. It's when you say a dime a dozen, that's not the case. It's every word is worth $1 million when it comes from the IR team itself. So even from the company itself. So no, it has not happened, and I don't think so. Because people from the company, representatives from the company, management from the company, they usually are very, very careful as to what information they will divulge in and as to what information they will share. But yes, they will give you at times hints that big things are coming. We have plans, and we will be making some announcements at a later period in time. But I think that's the best we have got so far. Nothing much, nothing more, nothing much. Yeah, but yes, exactly. Like in telecom, sometimes we used to ask them, because this was public information, 5G was coming. So we had to ask the telecom operators, where is the 5G? What is going to happen? When are you going to launch the 5G, or exactly those plans? So they would give you some answers. They would not give us a perfect timeline, but they would give us an idea that it's coming, it's on the way. So at least we could model that in. Compare it to the international peers and see where what value that would add in the long term. That I think that has been the best form of information that would have been given to us.
It's an excellent way of putting it. And as we know, telecommunications is one of the largest industries, as well as the most important in any economy. So to kind of follow up to it, I kind of wanted to get your idea as if perhaps an example of company or an industry who encourage analysts to kind of cover their sector or organization, and perhaps that reflects into their performance as well as how they've done in the past as well as going forward.
Again, telecom. Telecom has been the best. All the three telecom operators in Saudi Arabia, they have their own IR team. They are open. They communicate information, and they usually have the analyst conference calls. The management usually will give you time. So I think as far as I'm concerned, now Rayan has gone into the retail industry, and I see that the trend will change and people will follow him, and because they will see the value in the IR function itself. So yes, I think for now, but if you see now, all the banks are also coming up with IR. For us, initially, banks had no IR, but now Bilad has IR, Raji has IR. Most of the banks have IR. Bank of Jazeera has their own IR function. So I think now the industry as a whole, the economy as a whole, or the corporate world as a whole is understanding the importance of IR, because they understand that disseminating information that creates value, disseminating information that separates the myth from the reality, that is more important. Because in any part of the world, rumors will fly. So you need an immediate action plan, and that's the only people who can do is an IR function. The CEO is too busy handling the bank. The CFO is too busy handling the finance operations. The person who can make sure that there is no wrong information that is floating in the market is the IR function. And I think that's where it creates value. Sometimes you will hear all these positive XYZ news coming in, and then the IR would come and rationalize it, that it's not happening, or XYZ is happening and this is not happening. So we need a level of rationalizing from the corporate world, and that's usually it comes from the IR function itself.
It's a very interesting point. So, how would you say that in the past few years, that as you've seen the level of importance rise in regards to IR, has there been an increase to requests in regards to research coverage as a whole, and did that translate to the actual market itself?
Absolutely. Now, in the last couple of years, we have had companies call us directly to come and meet the management, and they present us the company as a whole and share the story with us. So they want us to do coverage, but unfortunately, we have limited resources. We are already covering 48 to 50 companies, and that is almost 70% of the market cap. So for us to go and cover a smaller company, we need to be sure that the management will follow through. The management will always be there once we need to talk to them. We need to make sure that the story, even for any company, we need to make sure that the story is there. And if the story is good, we will always put it there.
That's interesting. So you would say that you've, because of the level of coverage you've done, you've become a little bit more selective in your approach, which kind of translates a little bit well. So we do have a question from the audience that I'd like to also pass along, which is how can a small company like one of Nemu get research coverage or increase it? So since we've just mentioned that you've been a little bit more strict into the choices, how would you be able to recommend or answer that question?
See, I'll tell you what, for me, there's no small company or a big company, although a big company will generate much more liquidity in the market. But for me, as an analyst, what counts is the story. If the story is right, and if the macro and the micro both are intertwined in a way that they give a positive story, I won't be hesitant in covering that company. And in fact, that gives us value, because some of these companies that we have covered for a couple of years, we were the only one covering them. We had Geoff Agriculture at one point in time. We had MR Economic City at one point in time. Quite a few of those companies were under our coverage, and we were the main point of reference for a lot of these foreign investors, because for us, we used to get a lot of calls on these companies because no one was covering it. So yeah, if the story is there, we see that it might generate some activity in the market, and the story is is underplayed right now, and there is potential in the stock, we will definitely cover.
That's a very excellent point. With that in mind, I'd like to ask our colleague Rayan, from a corporate or a company perspective, as most of our audience members tend to be from listed companies or potentially listed companies, is how does one approach an independent research house, and what can they expect once they begin interacting?
Well, look, when you try to approach a research house, you look at the research these companies provide. Are they in their sector? So that makes it easier for them to start covering you as well. So, and then of course, you take the direct approach. You see some of the research reports that have come out from this company. Arqam has some, and you can find them everywhere. If you have a strategy team, then I'm sure that they've also have access to this. Also, when you're looking at the research, so you find the name of the analyst, you send them an email and he responds usually very quickly. There's all analysts usually are very keen to respond. But what's important for the analyst, I mean, Talha mentioned it, it's so important that to show that you are transparent, that you are honest, that you are going to follow through with your promises, and be available to the analysts for information, for questions they might have on the report, possibly holding your earnings call, having a presentation, all these things that you need to do. And I think that is what convinces analysts. Talha can correct me, but in my view, my experience, this is what I've seen. Now, I've known most of the analysts I've been in this field for the last, well, over 10 years now, so don't get me started on that. But it's been a while. But look, I have approached analysts, and some of them I've known for many years. Talha is going to start coverage, inshallah, soon, as soon as he gets some people working for him, so he needs to hire right now. Anybody has some quality staff for him, please send them across. But that's the point, right? I mean, the issue is that you reach out to them, you tell them, listen, this is our website, this is our presentation, it's on the website. We are here to discuss, we want to explain our equity story to you. And that's how you take the first step. And it might take 3 months, 6 months, a year, depending on the appetite of the analyst, depending on the capacity he has. Right now, we have the issue with MiFID II, which is this international separation between sell-side analysts and brokerage, which has not come to our region, thank God. But it's affecting international brokers a lot. Whereas in Saudi, we have the issue with lack of talent, and that's a problem we're facing right now. But these are all things that will be resolved, and analysts like Talha are in high demand across the region. So anybody who wants to get into this field, please do. But yeah, so my point basically is that, I mean, you have to take a step-by-step approach. Don't expect it to happen overnight. There might not be the right time for you because of your economic cycle. It might take even longer than 6 months or more longer than a year till analysts can actually start coverage. But the relationship, once it starts, it doesn't end quickly. So once a research house starts covering, they will not suspend coverage unless there's something that happened that has affected them in a bigger way. But usually they try to maintain coverage on all the companies they cover. And from one, you build on getting the next one. And I don't believe that you should have too many analysts covering you. I mean, depending on the size of your company, it always depends. So if you're a very large company having 12, 15, 20 research houses covering you is possible. Size like Aramco, for example. If the smaller you go, the less research houses will cover you. The less information there is about your industry, the more difficult it becomes. So you have to consider all these factors. But having 2, 3 research houses covering you I think is a good number for companies in the Nemo market. When you go above that into the smaller companies in the main market, then I think having 5 to 10, I think is a good number to be in.
Just something I would like to add over here, what Ryan has said, that information from the IR is very important, absolutely, but there is a level of information that is also missing, and that is from the macro level, that a lot of data on the macro level is not available. We don't get numbers like how many people, we have the POS number, like for the retail, we have the POS, but we don't get the footfall number from the government, or we don't. There's a lot of data that needs to come out, so that the analysis is much more thorough. We can where we can judge as to where the company is standing, because standalone the number might look good, $1 billion, excellent, big number, but if that $1 billion is part of a $200 billion industry, then you become a small player. So so it has to be a top-down approach. They inform the Saudi government right now, and all the stats body, they're trying to do their best. I see that there has been a lot more information, a lot more data coming in, and which is excellent. But I think a lot more needs to be done over here, especially for even for the smaller players that need to be covered. You need macro level data, and macro level data is something that right now is a bit hard to get by at times, not every time, but at times. And that's what I would be looking forward to once we have data that we cannot handle.
Those are all fantastic explanations, as well as I'm sure they provided a lot of answers. As we're reaching near the end of this webinar, there's a few questions that have been given to us by some of the audience attendees, which I'd like to kind of provide for our participants to kind of give their opinions and feedback. The one that we have at the moment is, would you recommend to smaller companies to develop digital IR initiatives, such as the IR website? And that could be directed to both Ryan. Yeah.
Yeah. So from my point of view, I mean, you have to start somewhere, and I think starting IR on a small scale it makes sense, and that growing that with time. When I took over the role of group head of IR at Arabian Centers, we were just going for the IPO. And I didn't have a team. I had a consultant, but that was it. So I built my team with time. And I think it's important that we do not underestimate the value of having at least somebody there. If you're starting with the role being part of another role and only being important at certain times when you announce results, or when you need to do the annual report, or things like that, I think it diminishes the role significantly. I understand that the payroll might not be there for the small companies, but the value that you get from having somebody that is there to speak to investors on a day-to-day basis, to develop the IR communication, to develop just to be available all the time, to develop the presentation, to work on the board directors report, and we're all very busy. I mean, it is important, and if you grow it within slowly, identify somebody from the communication finance team, or somebody who's done both, and develop that into a role. I think it's very valuable. I know a lot of times it gets mixed in with the board secretary, and that of course gets us to the whole other discussion that Turki, you and I have had multiple times. Where should IR be reporting to? And again, I advise people to have a look at the IR toolbook that the Tadawul has issued, and I think it gives a whole summary. And I won't say where I believe I think it should go, because I really believe that the company the IR should align with the board of directors, and that's my opinion on this. And if you have the right CEO, then that's great. But to me, that's my opinion, and I'll leave it at that. But I don't think you can start small enough with having an IR, the communication with analysts. I know some companies, even larger companies, in one of them, we all know which one, the IR is being handled by the chairman. And in other companies, IR is being handled by somebody who's also board secretary, or is also in finance, or is also doing something else, which makes his job so much more difficult because he already has a day job.
And makes him unreachable also, right, Rayan?
Yeah, absolutely.
It makes them unreachable also, because I'll continue from what Rayan is saying, because if a person, if like the chairman is the IR, heading the IR function, the individual will be very, very difficult to get hold of. Now, what I want to add here is digitalization is the way forward. And if it's cheaper and you're a small entity, at least a presentation explaining the result of the company, a presentation in a sense that defines what the company business is. And if you have any future plans, future outlook projects, presentation, just one presentation, that at least would give the analyst an idea as to where that particular entity is heading. Secondly, a strong annual report. But when I say an annual report, what I want a message from the chairman, a message from the CEO, a message from the CFO, and then a summary of the business, what happened during the year. So, and then the financials should come in. So because for me, the most important thing that I go through is the annual report. If the company has a comprehensive annual report where it explains what happened during the year, what are the next 5-year plans, annual reports usually discuss such things. So it gives you a basic idea as to where the company is going. Then you will have questions. That's where the IR comes in. But if you so that is a payroll issue. If some company has a payroll issue, okay, so be it. We can't help on that, but at least some information is flowing in. If the CEO is reachable through his secretary, or through the team, or someone else, or directly, and he is willing to take some questions, because he is usually busy, he or she, I'm sorry, they are usually busy people, and but if we can reach out to them, I think we will be all set.
And to avoid any problems in terms of the presentation that you mentioned, what I've done, for example, okay, the presentation is a bit large, so I can't really attach it to Tadawul announcement. So I do my presentations, which are about 30 slides, 40 slides, and never go beyond that. That's a hint to somebody else. But the point is, guys, that this presentation you're going to put on your website. You have your Tadawul announcement. You can add a link to that in your Tadawul announcement so that it is public information. Of course, don't make changes to it after you uploaded it, because that again would be not right. But there's on the Tadawul announcement and the financial results announcement, and I recommend that you don't change presentations all the time. A presentation should be on a quarterly basis. In real estate, maybe even less than that, just because of the slowness in telecoms. It's quarterly, and people are running. But because I used to head IR and Zain, and that's what Talha was alluding to just a while ago. But going back to the point of the presentation, have a presentation, talk about your history, where you came from, where you are today, and where you want to go. Talk about your industry, talk about your equity story, how this is developed, talk about your management team, talk about your numbers, explain how these numbers came about. And in your financial results, Tadawul does an amazing job in having this the detailed information required by the CMA all in there, but there is again limited space. So what we do is we attach to the financial results announcement, we attach a PDF to it, which is an earnings release, which has a quote from the CEO and other things. So it's a couple of pages, not too long, because well, analysts are busy people and covering other shares as well, so they don't have all the time in the world just to read through all the millions of pages that we're providing. But put valuable information, comparisons like for like on last year, growth. There's so many aspects of it, and Talha can write a book, but we are we are all busy people. We all have limited time. So I think it's important that on the presentation side, we make sure that it is in the public domain, so that you also don't worry about any related party trend, any selective disclosure.
They're all very, those are excellent points that you've made, and it's nice to see the information as well as the relationship that's obvious between the two sides of both IR and the research houses. As we kind of are reaching the end, I'd like to kind of present one question that's been given by the audience, which is rather interesting, and it's targeted more towards Talha, which is, what if the research has negative effects on the company? What is your piece of advice or your reply to this particular question?
I'll tell you what, research will never have a negative effect. If the story is not right and we see that the story is not right, we have to understand that our responsibility is towards the investor, and we have to give him the right picture. And if we see that the outlook is not conducive for the company, or the expansion plan, we do not agree with it, we have to come out clean. Maybe the company will pick it up from here, and they will take our critique as positive, and maybe they will reassess their strategy, or maybe they are in a better situation in understanding the market, and then they will come out and say, Talha, you were wrong, and this is how we see it, and they might change my mind. But it's not a zero-sum game. It's something that everyone. It's a win-win game for at least the investor.
If I may add to that, look, I've seen companies that have stopped speaking to analysts who put a sell rating on them, and I don't know what to say. I mean, this is the sell rating is a decision that's made on multiple aspects. So it's not a negative thing to get a sell rating on your share. The rating has many influences, macroeconomical, microeconomical, as well as the performance. And today they have a sell rating on you. You continue speaking to them, you spend explaining things to them. In 6 months, they'll change it to a buy rating maybe, or to neutral. And that's how these things go. You don't stop communicating, which sadly I've seen multiple times, with analysts, or you just stick to communicating with certain analysts because they have a buy rating on you. The rating, of course, is important, but it doesn't identify the relationship between the investor, or the investor relations of the company and the analyst of the sell-side house.
Just one thing I want to add before we close the webcast. A sell net rating is not necessarily a bad thing. Why? Because if a company has reached its fair value and it has surpassed that by 10-15%, and we feel that the value is 90 riyals, and we don't see the reason that it should be at 110 or 115 riyal as of now, so we are bound to give a sell call on it, because we think that it's overpriced. The income generating capability of the company puts it at a value of 90 riyals, and now it's trading at 110 riyals. If the company does not come, see, this is where the IR, if the company comes out and says no, the 105 is fine because we have XYZ plans and you need to adjust your models for that, we will go out and adjust our models. We will go out and see if the value is fair, if what the company is saying is fair. But if the company has no plans, it's a cash cow, and it's sitting at a beautiful level, and then it surpasses that, and we see that it has become expensive at a certain level, we are bound by the ethics of our work that we have to give that recommendation.
So going back to the point of fair value, right?
Yes, absolutely. It has to be fairly valued.
Yeah.
Just as we're reaching kind of the end of our allotted time, I'd like to kind of wrap up this webinar as well as thank our attendees. as well as our panelists who are been extremely helpful and knowledgeable in their own particular cases, as well as I'd like to make an announcement in regards to research funding, as some of our attendees and invitees might perhaps not know. Is Tadawul has recently implemented a research fund in which all listed companies can participate in, which will be in charge of taking care of the cost aspect of the research coverage. So this is something that's really important and very beneficial, we feel like, for all of the organizations and listed company to consider and list it on. And we're more than happy to kind of provide more details. If you contact us through the website, you'll be able to meet with one of our RM teams as well as one of our teams to be able to discuss this further. Again, I'd like to thank everyone who has attended. I'd like to thank our speakers as well as all the collaborators, and I wish you all a holy and blessed month of Ramadan and appreciate all that you provided.
Thank you. Thank you, Fawaz. It has been a pleasure.
Thank you ورمضان كريم والله يعطيكم ألف عافية يا جماعة. شكرا تداول، شكرا طلحة.
Thank you, Rayan. Thank you everyone. Thanks for listening.